Welcome everyone to today's webinar hosted by Cashfac and in association with Customers Bank. We are here today to talk on the topic of virtual accounts. So we are talking about winning the war for deposits and client retention and the theme of the rise of virtual account management in the US. My name is Jeremy Marchant. I'm head of Cashfac in the US. I'll briefly give an introduction and set the scene for this webinar, and then I will hand over to my colleague, Joanne Pollitt. Firstly, let me give a brief intro to the people you're going to hear from today. As I said, my name is Jeremy Marchant. I've been at Cashfac for 4 years. I've spent over 30 years working in banks, deploying technology solutions into commercial banks across the US and Europe. My colleague, Joanne Pollitt, is a Cashfac SME in commercial banking, an AFP member who spent over 30 years in US banking, specializing in operational cash management, and is formerly of Gartner and JP Morgan. We have Mike LaCava, who is an executive advisor to Cashfac in the US. Mike was the first customer of Cashfac when it was deployed at Webster Bank in 2020. And I will also introduce Jim Poor, who is head of Treasury Management at Customers Bank, a recent deployed customer of Cashfac. Jim has been a Treasury Management sales leader for many years, who's successfully developed and executed sales strategies for banks for many years. Prior to Customers Bank, he was head of Treasury Management at First Republic and Director of Sales Operations and Strategy at Capital One. And from what I hear, is a fantastic golfer. So you can ask him questions on that as we go through. So firstly, let me briefly set the scene on the topic today. So some of you will know Cashfac has been around for about 30 years. We have recently seen a huge interest in virtual account management in the US in the last 24 months, I would say. And these 4 points are ones I would highlight before we get into the meat of today's discussion. Firstly, we're experiencing an unprecedented market appetite for the value that virtual account management can bring to bank product offerings. We have about 40 US and Canadian banks registered for this webinar. We have spoken to about 100 banks in the last 18 months. So that is an unprecedented market appetite for this topic. Secondly, it's not just interest in the topic, but we're seeing high levels of urgency from banks to get ahead of the market and win new deposits and entrench client relationships by offering these capabilities that other banks can't. So we're seeing a lot of urgency from banks in terms of finding out what VAM can do, but also selecting, deploying, and going to market with that platform. Thirdly, and this is a key observation from Cashfac, which is that while the US is a late adopter of virtual accounts, for example, we deployed these VAM in the UK in the late 90s and then into Asia. But we're now seeing US banks, although they're a late adopter, create what I'd call next generation VAM. So taking the product ahead of what we're seeing the UK and European banks doing in terms of augmenting the product, adding new functionality, and really embedding it in their client ecosystems. And the final point 4 is that with this ambition, so the desire to go to market and win these deposits, is that there is a need for education and learning of what VAM can do across all the product teams and go-to-market teams involved in banks in taking this to market. So what, in other words, whilst there is that ambition, there is a need to ensure that the right teams are educated and are going along behind the sales teams to really benefit from what VAM can do. The final point on that slide is that Datos Insights, a advisory firm in the global but operating in the US, has this week rated Cashfac as the #1 market leader for virtual account management, which we are incredibly proud of, and we think does represent the investment that we've made in our product in recent years and over the 30 years that we've been in business. A couple of slides that we think will help set the scene, and these are slides informed by the virtual account management assessment that Datos Insights have released this week. Just one comment at the top there, which is from that report, where Datos say that for large and mid-sized banks seeking to navigate disruption, drive revenue growth, and enhance customer experience, embracing virtual ledger technology is not an option, but an imperative. So we would agree with that opinion, and that's based on what we hear from banks in the market in the US and Canada that we've spoken to in the last 12 months. The second point on that slide is that there is a huge expectation of widespread market adoption of VAM solutions. So a Datos Insights survey on VAM, where the question was, how likely is your bank to leverage this technology over the next 12 to 18 months to attract deposits? Basically, they surveyed 42 mid-size and large North American-based banks in that question. And 88% of those surveyed either already have a VAM solution or are likely, very likely, or somewhat likely to deploy one by early 2026. So that really does validate some of the points I was mentioning on the previous slide. The final slide from me, which is again from the Datos Insights assessment that came out this week, is to just briefly talk through the factors that are driving that VAM adoption. 3 points. One is competitive pressure. So this is where financial institutions and banks are really getting the push from their sales teams and from the market, from their clients, to offer the flexibility that VAM can offer and those cost efficiencies you get internally with a VAM solution. Secondly is legacy system limitations. And then finally are the regulatory frameworks that are incentivizing the use of virtual accounts in the market. The point on the right-hand side is our observation, not from Datos, which is also a factor driving VAM adoption, which is fast time to market. What we are seeing in the US banks we've implemented for is a really fast ability to stand up a VAM solution with a minimum viable product that can go live in under 2 months. So we're not talking about a multi-year project that banks might be experienced in with other more complex core banking type implementations. But hopefully that those insights are useful and those data points will help that set the scene. I will now hand over to my colleague Joanne to lead the discussion with Mike and Jim.
Great, thank you, Jeremy. Just to give you some context for how we'll spend the next 50 minutes or so, I'm going to have a dialogue asking Jim and Mike both some questions around their experience having implemented recently a VAM solution, as well as then turn it over to Mike to get his perspectives more broadly, not just about his implementation experience, but what he sees in the market today as he's out working with multiple banks on many different initiatives. So we'll have him share some perspectives about that with us. Time permitting, we'll then do some Q&A. So if you have any questions you would like to submit during the course of the conversation today, please just enter them through your screen and we will collate those and try to address as many as we can. If we're not able to get to them today, we'll be sure to follow up with you after the webinar. So hopefully that will set the stage for the remainder of our time together. Jeremy will close out with just a couple of closing remarks and we'll let you get back to your days. So thank you all for joining us. And Jim, I'm going to turn over and start with you. Jeremy just shared some interesting tidbits from Datos around drivers for adoption of VAM and talked a bit about what we're hearing from banks as we talk to them in the marketplace. Can you share a little bit about some of the drivers? Were those the same for you at Customers Bank, or were there other things as well that led you to the decision to implement a virtual account solution?
Yeah, thanks, Joanne, and Jeremy, thanks for the nice introduction, but I wouldn't use the words fantastic golfer, maybe fanatical golfer is what I would say. I think for us, there were, and for many banks, there were several drivers that really come into play when you're looking at a virtual account management. The first is all banks are trying to lower their cost of funds, and they're trying to bring in deposits. For many banks, if you don't have a virtual account management system, it knocks you out of the market to get certain types of deposits. So a great example of what I mean is if you have many real estate management companies in your portfolio, if you have large ones, say a management company that has 10, 20, 30,000 units that they manage, that's a significant number of tenant escrow accounts. You're not going to open those accounts manually. And in fact, you'd have to turn that business away. So in terms of going after relationships like that, you'll always, be in a negative position in terms of your ability to bring those deposits in without them. If you have real estate management companies and you don't have, for example, a VAM system, you run the risk of someone else handling those deposits or talking to your client routinely and potentially luring away the larger relationship. Those are types of deposits that tend to be sticky, and they're the types of deposits that are low cost. And that's just one example. Another factor that comes into play is, and again, regarding liquidity and the cost of funds, is the diversification of your deposit base. A virtual account management system can allow banks the opportunity to go after verticals that they may never have gone after before, or just don't have a strong enough product set to go after. Those types of verticals could be healthcare and nursing homes. It could be HOAs, 1031 exchange. So I think those two are very big factors, and they should be factors probably for any bank. On top of that, I think there is incredible operational efficiency that comes with it. So as I mentioned before, if you had a real estate management company that had 10 or 20,000 accounts, excuse me, for you to actually handle that in any manual fashion, you would have to have a large department the way we did in I wanted to say the olden days, but 30 years ago, banks had large departments that did nothing but open and close tenant security accounts. If you want to get that business today and you don't have it, you're not going to go out and hire 30 people to do manual work. This allows banks to take on this type of business with, virtually no additional staff. It's pretty much can be handled by the existing staff that you would have, and it would just open up the door to bring in a lot of deposits. I'm going to pause there, Joanne, see if you have some follow-up questions on that.
Yeah, no, I think that aligns with what Jeremy shared and makes a lot of sense to me. I think the one thing that you talked a little bit about was sort of you may need to turn away new business. And I think that's one of the things that we've heard from one of our clients is that they've unexpectedly been able to kind of bring in new business because of the self-serve capability, not necessarily from an operational perspective from the bank, but also from the customer's perspective. They had a large book of business, but their customers wanted to be able to self-serve and do work on their own without having a dependency on the bank to open accounts. And they really were trying to be more efficient around a lot of the automation they were trying to do within their own organization. So I'm not sure if that's something you've heard from any of your clients, but I think that's just another one that we've heard as well as it relates to sort of what's driving people to recognize the need for VAM.
No, you're absolutely right. Typically, once someone starts to use a self-serve system, I'll even back up. And then quite often customers are resistant to change. They like to do things that they normally do and become very routine in their habits. Once someone moves towards a virtual account management system, they never want to go back to what they were doing before, right? They don't have to wait for someone at the bank to get back to them. They don't have to email requests or send in requests manually to open up new accounts. They can do it on the fly themselves. It's just far more efficient. And they also have all the reporting and the capabilities at their fingertips. And that is really a big driver if you want to expand, these low cost deposit opportunities, high volume, low cost deposit opportunities. If there are clients out there you're going after and they have the system, they are not going to give it up and come to you. You either need to get one quickly, or you're going to have to forego that particular part of the relationship. And as I mentioned earlier, in many instances, in several verticals, these are low cost deposits that are very sticky, and that's what banks want.
Yeah, I think the whole focus on deposits, it's so interesting that we're talking about it today as if this is a new thing. It's, you and I and others on their call have been in banking for many, many, many years. And it's not new, but the way in which you're able to gather them, the way in which you're able to manage them and actually make the low cost be a reality is something I think that we're starting to, one of the other reasons we're starting to see so much interest, in virtual account solutions. So it sounds like from the customer's bank perspective, there were clear drivers for wanting to do this, and you moved fairly quickly in terms of from when you decided to go forward with a program, selecting a platform and actually implementing that platform. I know many times in my experience as well, having worked at banks and worked with banks implementing large programs, implementation comes with challenges oftentimes. We're seeing a lot of different paths that different customers are trying to take as it pertains to ways to implement solutions. So there are things like an MVP approach. There are, the big bang approaches, which we see obviously less and less of these days. Could you talk a little bit about how you thought about implementation and sort of you went an MVP route, why you chose that? And then Mike would like to get your perspectives after Jim shares on that as well.
Sure. So I've been at banks where we've taken both approaches. In one instance, we wanted a fully complete product before rolling it out. And here at Customers, we started with limited capabilities and have added on and are progressing to get to our final state. And there are good points and there are bad points about each path. So in terms of what Customers did, in terms of starting with out a fully loaded product capability set, we started off simply because we had relationships that wanted to give us business, and we wanted to get that business in the door and to start on it. There's some advantages of doing it that way. As customers start to experience the product, they can suggest ideas and things that might be unique to them or appear to be unique to them, but can be broadly developed for all customers. So it gives you the opportunity to do some development work in the process. The negative side, or I should say the part of that you have to be very, very careful about doing, is you have to carefully select the opportunities that you are going to bring on board, because you need to make sure of two things. One, that what you are going to offer the customer meets the very specific needs that they have to use the product. If it doesn't, you certainly don't want to use that particular customer, because you could end up with negative feedback. You also have to be cautious in terms of not only selecting the customer, but internal partners as well, who are going to work with you on the product side as you develop and roll out the product. On the other hand, if you wait to the end, you could be missing deposit opportunities that could potentially go elsewhere. And, every bank is different. Every bank has their own rationale in terms of how they roll a product out and how they want to do it. But I think those would probably be the two extremes there. If you do the minimum viable product for a specific customer or a set of customers to start to pilot and roll out, you just have to be incredibly cautious about how you do that. Would you agree, Mike?
Yeah. Sorry, I'm taking myself off mute. Yes, I absolutely agree with you, Jim. I think from my perspective, it's definitely best to start with a targeted approach. You want to get quick wins under your belt. You want to gain momentum, because I think, as you described and has been my experience, the real value in that is that you walk into this with a set approach and a goal which you're hoping to achieve, but you may be surprised on the way that all of a sudden there's other opportunities you haven't thought of because you are actually out there and running with that. We'll talk a little bit more about that later when I talk about the different verticals that we're seeing and experiences in there. But I want to reiterate a couple of points that are similar to what you said too. You definitely want to select prospects or existing clients that are going to benefit from your solution. If they're not interested in self-service, the worst thing you can do is put something in front of them that makes them do work that they didn't have to do before, right? But there are a lot of clients these days who are looking for that. And clearly the benefit is timeliness, because of the fact that they can do it as quickly as they can versus waiting hours, days, and weeks sometimes for account ownership, opening of accounts and things like that. So it's okay to start with things like a file-based integration versus APIs as an example, because the latter may take a little bit longer unless you're really already in that situation and state to be able to do that. Just a couple of other key points that I would suggest that are important, regardless of the approach you take, but assuming you take an MVP or other. Ownership and partnership. I can't stress them enough. They're key. And the reason why they're key from my experience is that often the most successful solutions and implementations start with a product manager for a virtual account management solution or deposits or the like, or anywhere within that realm, because they become the quarterback. They tend to drive all of the partners, and the partners are all critically important, whether it be IT, ops, the business, in this capacity. But the go-to-market strategy of implementing this and being successful starts from inception, not when the implementation is done. So you're thinking about all that, and certainly you have a project and potentially a project manager that's helping you navigate through all those steps. But you are the person, the product person is the person with the business knowledge and can reach out to other experts with the business knowledge to help bring the rest of the organization who may not be as familiar with this, into the right frame of mind as a result. So I stress that, and I think it's extremely important. The other point that I will mention too is that the partner you select is extremely important. You want to make sure you select a partner that cares as much about your success as well as their own, right? I mean, we've all worked with partners in our life, and sometimes partners love to point back and say, well, you didn't do this, you didn't do that. Good partners don't do that. Good partners are very interested in the long-term strategy of the organization and their customers, and hoping that they will continue to grow this. And I think, Jeremy's mentioned about how long Cashfac's been around, and I can attest from my own experience, and that's the reason why I'm here, is that the partnership matters, and it will always be that way. And I've sat on both sides of the fence. And then the last thing that I would just say around implementation is be careful about choosing a tool that only meets a specific need, right? You want to choose a tool that meets the needs that you're talking about now, but has a great expandability, so that going forward, the things that you also want to accomplish, or the things that you may not have realized this could apply to, can be leveraged and expanded upon. And I'll talk a little bit more about that later, but that's what I would add to the comments that Jim's made. The only other thing I would say is I want to become a fanatical golfer. Unfortunately, I need to find the time. I guess my heritage wasn't in sales, so apologies, but it's certainly a long-term goal. Back to you, Joanne.
Great, thank you. Thank you both, Jim and Mike, for those insights. I'm very interesting in terms of, the question was around implementation and all the considerations that really take into account the customer in the planning that you need to do, regardless of whether it's an MVP approach or not, and sort of the importance of keeping that focus, while you're going through the way that you're going to introduce the product to market. Is there any early feedback, Jim? And I know obviously we don't want you disclosing anything that's confidential, but is there any early feedback or sentiment that you can share from your customers directly? So it's been great to hear sort of the bank's thinking about how to approach the market. How is the market actually responding? Is there any highlights there you'd be able to share with the group?
Yeah, I think for us, we've already achieved some significant deposit growth that we would not have had without this product, and our pipeline is quite extensive at this point. So that's a very positive on the bank side, right? When you're achieving your objectives. I think from a customer standpoint, customers are very welcoming, and I think they're also very they're anticipating some of the enhancements that we plan on offering over the next couple months. So there's a lot of positivity around the offering from both an internal perspective at the bank as well as from a client perspective. I know we've had, as I mentioned a little earlier, it's all about deposit growth. And if you don't have the system, you're going to be incapable of expanding the existing relationships that may require it, and or bringing in business prospects from the outside that require it. And we've had, we've been successful in terms of both of those, in terms of bringing in brand new prospects, as well as doing cross-sell to existing customers. And I think from the customer experience perspective, it's also been great in the sense that customers will give you, really good feedback, and that will tell you whether you're moving in the right direction. And we've gotten a lot of positive feedback from that.
Right. It's always, somebody said earlier, people don't like change typically, and they said customers don't like change. I would take it further to most people don't like change, not just our customers. So to have an experience that's positive and to get feedback is important. I think one of the things you touched on is something that we at Cashfac think about all of the time, which is, okay, we've got this out in the market, we've got clients using it, they're happy, but how do we continue to evolve the solution? How do we continue to think about not what they need for today, but what is the next step? And so I think, as Jeremy mentioned earlier, one of the things that we were really proud about the Datos recognition was because we do spend a lot of time and investment in the product, thinking about not today, but the future. And so it's great to hear it being received well in the marketplace, but I think it's equally important for folks who are thinking about going with a VAM solution, or thinking about, is this something our customers are demanding today, that you go kind of beyond today and you start to think about what else, what could be possible if we were to go down a path like this, so that you constantly have that customer insight in mind. I think one of the benefits of all of the digital era and the online banking and customer experience focus that has taken place in the last several years, it's really just kind of opened the eyes of our customers to expect us to continually improve and to anticipate, not just respond to what they want, but to anticipate what they may need that they haven't had time to stop and think about yet. So it's great to hear that you're getting good feedback, and I'm sure that encourages the sales teams and makes it easier to go to market and try to reach out to new customers.
Yeah, I also will add one more comment. I mean, the primary trend, or one of the core trends going on in treasury management today, is all about efficiency and automation, direct connectivity with the bank for wires, ACH, any money movement, reporting. The fewer steps someone has to take in a Treasury area, the faster things that you can get things done is, just evolving at an incredibly rapid rate. And the virtual accounts management systems help customers achieve that because they can do things much faster, do it themselves, have reporting at their fingertips. And I really think that clients, you brought up a good point where that you made a little earlier, where it's new to customers, right? One of the objections customers give in the beginning, or that we sometimes hear, is, oh, well, now I have to do this myself. But once they see the system and they actually understand how easy it is for them to do this and get it off their desk quickly, as opposed to waiting for information back from the bank, it has really moved the opening of accounts for escrows, to a whole other level, right? And I just think you're going to see, to kind of echo the comments that Jeremy made in the beginning, you're going to see, I think, tremendous growth particularly over the next year or two, in terms of banks adding virtual account systems to their core product set.
Yeah. Joanne, if I might, I think I'd love to add a couple of points to what Jim has just shared, because I think this sort of drives it home, and it was forefront of my mind, if that's okay. So I think back to, I'm dating myself, but thinking back to when I was helping to build an online banking solution when I was in technology, before product strategy, on desktops, before the internet, right? And so to me, treasury management, cash management used to be what you see is what you get, and that's it. And where we are right now is in what we like to call the consumerization of commercial banking, right? So all of us are consumers, and all of us expect that all of our interactions with whatever is presented by a bank or anything, Amazon, you name it, works the same way. And that aspect is extremely important. So what we don't put in front of clients annoys the heck out of them if they think they should be doing it and they think that they could, make it more timely. And I think that's a critical thing, and aligns with what Jim was saying. And that is that most clients really welcome this, provided they are going to get the benefit. If you've got a client that you're doing all the work for, and clearly they're not going to do anything, they're probably not your best place to start, and they're probably someone that you'll have to show the benefits and work. But the majority of the workforce and the people today, it's definitely changing. The other important thing is that the trend is for banks to hire vertical experts these days from a sales perspective, and to bring and draw in those deposits. We have been talking to banks who have done that, and they have a following. They have clients that have worked with them at any bank that they've worked with before. And if they don't have a solution to offer those clients are not going to leave and go backwards. And we're hearing that over and over and over again. And Jim, you also alluded to that too. So I think that's important. And then when you do provide the self-service capabilities, you have to make sure that you're choosing a solution that's going to not just allow you to open accounts easily, but to worry about things like automatically matching and allocating, so that way the client has this straight through capability that Jim also was referring to, and that we see, so that you are streamlining the work and the effort. And so I can set it up, and the transactions come in and they all go where they need to go, and I can produce the reports that I need to do, and I can see everything I need to see. Boy, this is great. I wouldn't want it any other way. I mean, that's really the key. And then I just touch upon a little bit, I think the last comment that Jim was talking about this deeper integration, right? So clients are expecting more and deeper integration. There are clients that don't even want to use any kind of interface from a user experience perspective. They want integration to their back office. They want to start to embed the workflows. We call it embedded finance these days, right? We have clients who are asking for us to actually stream data to them in a real-time fashion so that they can post to their back office system, as opposed to anybody sitting there and keying anything in. So I think these are all the important aspects from a customer experience perspective. You can ignore them. You can say, nobody ever asked me for this. But the truth of the matter is, if you dig deep enough, what you'll find out is that they're going somewhere else for it if you don't offer it. So that's what I would add to the customer experience. I think that plays well against what Jim said, and that's exactly what I'm seeing too as well.
Well, I think what I've heard from both of you is really that there's a compelling business case, not just for the bank to do this, to grow business and to have operational efficiencies, but really for customers too. And I think that's the world we try to balance all of the time, is where's the win-win, and how can we help, how can we as a bank really help our customers be more efficient so that they can go about doing all of the work that they need to do on their daily basis. So thanks for sharing what you did. With that, Mike, I'm going to turn it over to you. I know you have some sort of broader perspectives in terms of just the market in general and what's happening based on some of the work you're doing across a lot of different organizations. So I'll turn it to you, and hopefully you can share with everybody some of the big trends that you're seeing in the market that you haven't already touched on.
Happy to do that. I think that when you think about the specific kinds of verticals that banks are starting to target, they are also the typical. And I know Jim has mentioned them. I've probably mentioned them, but I'll mention them first, and I'll sort of dive in a little bit more to some of the other kinds of things that we're hearing, which are, newer and or different. Legal, managing escrow accounts for clients, property management, as Jim described, where, properties and HOAs are opening and closing accounts on behalf of all those good kinds of things. They're very obvious. I mean, when we went through our business case, those were the two drivers for us in regard to new business opportunities and everything that we were looking for. And what we're seeing today, though, is a very thoughtful approach to the fact that a virtual account management system really equates to a subledger. And anything that would benefit from a subledger or a sub-accounting solution, especially one like the VBT solution from Cashfac, has all the bells and whistles from an accounting perspective to make sure that everything is done in the proper way and orderly. So we've got clients who are exploring digital asset business, as an example. And that is whether, they're looking to extend with a partner what they're looking to do, or, on their own. We've got banks that are looking to create a closer tie with wealth management, which often was more tied to, a private bank and a consumer side to the commercial side in certain aspects. We have banks that are, and a bank I used to work at that was in the banking as a service business, as an example, where you have fintechs that want to look like banks, and they need the ability from a sub-accounting perspective. And we'll touch a little bit more about that later as to why. You have others who have customers in the franchise management business, where they have multiple restaurants, multiple hotels. You can start to think about any kind of franchise, if you will, where they basically want to simplify the core account and everything else becomes a virtual account. You have clients that are banks that are looking at the healthcare business. And this one I'm going to talk a little bit more about because of my experience, and wasn't something we thought about before. But there's a lot in the healthcare space where money is being managed on behalf of people who are in accidents, et cetera. So a little story about this was, we focused on property management legal, as I said. And as we were progressing down a few months, what wound up happening was we had a prospect come to us and say, we are managing funds for people that were in accidents. And we will give you these deposits if you can, have the sub accounts for all of these particular clients. When we pay out the bills, we need to know where the money is and where it's coming from and what the balance, et cetera, et cetera. And you have to integrate to our back office. Not something we ever thought about, not something that was part of our, original approach or requirements, but the deposits were significant. And we worked with Cashfac to do that back office integration. And what I could say to you is that you can read this publicly. So a year ago, Webster Bank acquired Amitros. And in the last annual report, it accounts for $1 billion worth of deposits. And a lot of that has to do with the fact that there's a solution there that is integrated into their own back office. They never even look at the UI. So we never thought about healthcare, but there's another good example of one that came there. You have some construction projects, even for municipalities, where they want to break out the expenses related to road improvements, repairs, and stuff like that. And then you have some internally focused ones around interest management, where you just want a better handle on how you're managing that in a better way than the way the core is dealing with it. And the last thing that I would say, and it's a very broad topic, is we're hearing some discussions about places banks didn't often go. I won't get very specific, but I would call them non-traditional banking services. So I think the interesting thing for me is that all of these things apply. I tend to like to call this the engine that could, because the idea here is that you want a solution that could support all of these, not just one of these, all the ones that you may need. You may not be interested in all of these, and you should focus on what your core is and really where you want to go. But the idea that you have that extensibility, the idea that you have a solution that can be very specific to showing the terminology for a property manager, which might be, and the hierarchy, which is different than a legal and a law firm, I think is critically important. So that's where I see the verticals moving and shaping. There's a couple of other key areas that I'm seeing in the market. And some of it is around the fact that many banks are sitting on cores that have been around and DDA solutions, same thing, for a very, very long time. And they are sometimes often archaic. The ability to integrate with those solutions is very, very limited. And the timelines to integrate tend to be longer and expensive. So often people use the core to have these sub accounts, and it's at a cost. It's a lot more expensive to have an account on a core. The work that happens with the accounts on the core, guess what? They're all at the bank, and therefore you got your operational costs, and you lose all the timeliness, and you lose all the self-service. And I can go on and on in regard to that. So the idea here is to take that capability and functionality off the core. And the last part that I think is extremely important here is that many of the cores do not support contemporary features, right? And the integration that's needed. So if your client wants this embedded banking, and I like to say that what banks are trying to do these days is to extend the bank into the customer's back office. And I've believed in that for quite a long time. We made this decision almost 5 years ago now, right? So in everything that we do and everything that I see, this is becoming, very, very critical. So those two, I think, are really key points. And then I think, we can sort of drive home a few other things here. Jeremy went through the slides in regard to some of the Datos Insights points and why, virtual account management solutions important. And Jim talked about increasing, the ability to get deposits and to efficiently support all these verticals and to meet self-service. But there are other reasons from an accountability perspective, especially to the regulators. I know we're in flux right now between whether we're going to have regulatory requirements or we're not going to have regulatory requirements. But, if you are doing any kind of sub-accounting for a client that you have, and you don't have access to that information, there's enough examples out there where things have gone belly up or they've gone wrong. And it won't be long where regulators do require that. And in certain cases, I know in the banking as a service space, that was a requirement because the bank was being held accountable. So if the bank's being held accountable, I think that's extremely important. And I think the other part is around the fact that VAM is table stakes. You could talk about the fact that 88% of the banks either have it, will have it, intend to have it. It's table stakes, and it was table stakes for us, 5+ years ago. So, I think it's critical. It's on everybody's list as a key initiative. So I think that's important. And the last points that I would reiterate around all this too, as well, again, is any solution that could benefit from a sub ledger or a sub account really is a candidate for a virtual account management solution. And that focus should really be on client facing, or if the need is purely internal, you can certainly start there too as well. It doesn't matter. The tool will actually provide abilities for the internal users, even if you expose it to clients. And you also want to make sure that you do select a tool that gives you the control to be able to determine who can do what. Some of the solutions that are out there, you get in and you get the keys to the kingdom. You want to have a solution like VBT that actually gives you the ability to say, this customer can do this customer can't do that, this customer can actually have payments flow to your in-house payment capabilities too as well. And clearly, I'll reiterate that point, that if you're a financial institution that's providing any sort of commingled financial services to, with commingled accounts to any clients, it's in your best interest to make sure that you have visibility into that, and that you can see the transaction flow, and that you can provide an ability and a way to be able to do that. And the last point is the one that I've sort of been hammering home. Whatever you choose, don't choose for just what you need today, because I think the world is a lot larger than that. And I think there's a lot more potential for this to grow. And as you get started and you get on your way, I think you'll quickly realize it and see it. And that's the reason why Jim and I were hounding out MVP, because getting the quick wins under your belt, you will actually see, where things go. Joanne, I don't know if there's anything you wanted to pull apart about what I said and ask me to expand, but I think those are the points. I know I said a mouthful. Hopefully I said it slow enough, but I hope that's helpful. You're on mute.
I'm sorry, can you hear me now?
Yes.
Okay, thank you. No, I was just saying thank you. It was helpful. I think what you've sort of addressed underscores a lot of the things that Jim talked about and some of the reasons that Customers Bank did this, but also the forward-looking concept of don't plan just for today, plan for the future. I think it's important that people keep in mind the future will change also, and kind of goes back to what we talked about earlier around how do we anticipate and be sure that you're anticipating what your customers will need in the future, but also what could be, who could your customers be that you're not servicing today if you had some capabilities that seem to be becoming kind of not just table stakes for some organizations, but a couple of years from now, likely just standard offerings in the marketplace. So I think we've been talking to a couple of banks that we've been working with who are kind of early adopters, and they're disrupting the market a bit in terms of getting out there quickly and doing some interesting things. And I think we're going to start to see, as a result of that, other banks that are taking a more cautious or standard approach really start to come to fruition. With that, we do have a couple of questions that have come in. So before I turn it over to Jeremy, if you guys are willing, I may throw some questions at you.
Yep.
And I'll try not to stump you, but sometimes people like to stump us. We'll see what happens.
As long as they're not golf questions, I think we're good. Or Jim can take those.
Okay. Actually, the first is something, Jim, that you talked about. It says, Jim talked about the convenience that self-service provides to customers. Is the impact on the bank operationally also something we should be taking into account when contemplating our business case?
Yeah, absolutely. It's a win for the bank because there's less demand in terms of having a department or a group of people to constantly manually open and close accounts. So it's an incredible benefit to the bank. And to add to that, and to kind of harken back a bit to something Joanna just said previously, at some point, and I think that point is coming soon, these types of systems, they're going to be a core product, just like your regular online banking is today. So the future is now. So if you're on the fence and you're thinking about this and you say, oh, well, maybe we can do this next year or the year after, well, you'll be left behind, I guess is what I'm saying. It's incredibly important to do that. And specifically, again, to the question, it's just an incredible benefit to the bank because of the savings of not having to hire additional people, and then not just the savings from that, but at the same time, the additional revenue that the product can create, right? It's a product that's going to more than pay for itself over time and fairly quickly. So I can't stress those benefits enough.
Joanne, it it really should be part of every business case, to be totally honest with you. It was part of ours from the very beginning. I think, as Jim said, if you look at just doing things as you are, but bringing in these vertical specialists as an example, you're gonna suffer and you're gonna be inundated. And the only way to solve that is by bringing in people, because all the work is in your shop, right? And you're still not going to fulfill the timeliness options that clients really want. So part of the business case should be, what's the cost of me growing those deposits and this revenue in this sticky business, right? By bringing in all these people if I didn't have a solution like that. And I think that will help you too as well.
And just to put it out there, when we talk about business cases, we've worked with so many banks on this over time that, we as Cashfac would be happy to help folks think about the different components that you might want to contemplate as you put those together. So feel free to reach out to us, as well, if you have further questions on that. The next question is an interesting one we didn't talk too much about. We did talk about implementation, but this is about that, but with a different twist. It says, you've talked about getting to market quickly with a van solution. Does that equate to a large resource drain from the bank to stand this up? And maybe, Mike, you can give us your perspective, and then Jim, having recently done this, yours would be helpful as well.
Yeah, I mean, I think when people equate implementing new solutions, it often becomes what's already on the technology plate and how many people, do they have in order to be able to do that. And look, I've lived through the time where I worked at banks where we built everything. I think I gave that example earlier of online banking too. I've seen that era and change switch, except for the very, very largest banks. Most of the bank's technology folks are supporting vendor solutions or stitching them together, right? So this is not a heavy lift from a technology perspective in any way, shape, or form. And I think as Jim talks about how quickly they went to market, you will hear that. The effort on the bank side really would be focused a lot on what is the go-to-market strategy, who are the customers you're going after, what are those business opportunities, what is the impact and change from an operational perspective to support it, because operations has a role, but it's a different role to make sure everything else is there and that the client's doing what they need to do. And a lot of that happens, on a self-service perspective. And that technology obviously is comfortable and happy about a cloud-based solution, which they all are today. Nobody wants any hosted solutions anymore. And it's a managed service. So there's really very, very little lift from that perspective. It's really all on the business side, how you're going to get this rolled out, how you're going to train people about it, how they will understand how to use it. And, obviously you want everyone involved so there are no surprises. But that's how I would best describe it, and let Jim offer his comments.
Yeah, I don't, in terms of a demand on the bank and resources, it wouldn't have been any different had we built the entire product out and then released everything at one time, simply because the same people involved in the build are going to be involved either way. So again, we simply chose to do it this way, or to roll it out in stages, simply because we had opportunities we wanted to get in the door. But again, to answer the question, it wouldn't have made a difference in terms of more staffing or any change in staffing to bring the product to life.
I think that aligns with kind of what we anticipate when we work with banks. It's a point in time of resource, but it's not overly demanding. I'm happy to feel like long gone are the days where I used to, run projects for that went on for months and months and months and into years. That these new solutions and the way they're designed and implemented, don't require that much of a resource drain. So that's always very positive. The last question that I think we have time for, and there is a couple of others. If anybody submitted one that I'm not seeing, we'll check afterwards, and I'll get back to you separately after the webinar. But the last one, and Jeremy, this one may be for you, but it's basically, are banks able to incorporate this into existing solutions so it's seamless to customers, or do they go elsewhere? I think that's trying to get at, is this something that they can incorporate like into basically a delivery channel that already exists, or is it a separate?
Yeah, I think maybe Mike can talk to that from your experiences better than me.
Yeah, no, I definitely can. I'm happy to do that. Yeah, so there are options, and this solution can play in any of those. What you have to look at is how many of your clients that are using an online banking solution, as an example, are also going to be clients that are going to have virtual accounts. Certain organizations, it may be the lion's share, and certain organizations, it may be the minority. So you can do things like single sign-on between your online banking solution and a solution like VBT. It certainly supports that. You can do it. Client can do it internally only. It really depends upon where you see the need and what need you see. If you've had an opportunity to see any of the demos, that there is an opportunity to brand it and make it look as much like your bank's online banking site as you possibly can, within reason, naturally. And over time, as everyone's talked about the continued investment, there's other enhancements that are coming around UI and UX that will make that even better. And so that integration for clients who want an interactive view certainly is there, and there are options to do that. And it's industry standard integration with things like Okta. So it's not something that's funny or anything like that that anybody would balk at. The second part is there's a whole suite of APIs and an ability to work with middleware and even more forward thinking and contemporary solutions.
Thank you. I think that, and in the interest of time, I'm going to turn it back to Jeremy. But before I do, I just wanted to thank both Mike and Jim. Very, very insightful, the things that you've shared today. I'm glad it's working out for you and your client base. But Jeremy, why don't I turn it back to you now to just some parting comments and to wrap us up.
That's great. Thanks, Joanne. So that's been a really fascinating debate. And I think a lot of the themes that we're seeing in the market really came out there. Just let me summarize in 60 seconds. I think sort of 5 key points really came out. One is, I think, the sort of criticality, overarching point of having a VAM solution really came through firstly around the business case. So obviously internal efficiencies and bringing in the sticky and the low cost deposits. I think Jim and Mike both talked about partnership being very important. So internal and external. So partnering with your vendor and partnering internally between the sales, product, project teams across the piece. Specialization was a big theme that came across. So having a solution, but also the teams to support that specialization and winning the new business. Having a really clear focus on the customer. Jim talked about clear communication as you're bringing on new clients and when you bring them on. And the final point that seemed to come across is the strategic thinking. So thinking about what you need, not just for now, but for the future, and about the sort of solution that you might want in the future, rather than just solving for a client for a need you have now. So hopefully people have found that useful. Feel free to reach out to us should you want to discuss any points. But I think at that point, we will close the webinar. And thank you for all attending. And once again, thank you, Jim, and thank you, Mike.
Thank you.